So if you recall, yesterday, the big news out of the market was that First Republic Bank was going under. Okay, and that was a very big deal. And JP Morgan was taking it over in a sweetheart deal. And on that news yesterday, JP Morgan was actually up quite a bit. All right, so the market took it as good news. It wasn't good news, but that's the way they chose to take it. Now, you always judge the health of a stock by the quality of the bounces and sell-offs. And this is another little trading tricks lesson I'm going to give you, and an investing trick. All right, so let's say you have, let's say you're a trader and you're looking for a good trade, and you find a stock that had just moved up dramatically. I don't care which time frame it is, whether it's the daily chart or whether it's 5-minute chart, but it just had a strong move up. Okay, that's your first clue that you might be interested in this trade. But the real question is, what's the quality of the sell-off after that rally? Because if a stock has a big rally, but then gives it all back, that tells you that rally was not real. That tells you that was a sugar high. That tells you that wasn't a meaningful pop in the stock. It was a fake out. Okay, but if that same stock has a big move up and then just sells off a little bit, okay, that's the clue that this rally is for real. Because after the stock just had a big run, a lot of people had just made a lot of profits, so they had every excuse in the world to take their profits. But when they don't, when you have just a little bit of a sell-off, that tells you there's actual sincere interest in that stock going forward. So when you're looking for stocks to trade to the upside, you look for a stock that just had a big run up, had a shallow pullback, and then goes into a long channel. By the way, what I just described to you is what's referred to by my students as the Anderson pattern. I didn't create it, but I put my name to it, and among my students, they know what it is. And again, the characteristics of an Anderson pattern is a stock that has a sharp move up, a shallow pullback, and then a long, narrow, tight channel. I won't tell you how to trade it here because I charge money for that. And I don't, but the point is, you want to judge the health of a stock or a commodity or a crypto, anything you're trading, including the markets in general, by the quality of their pullbacks. So let's take I'm going to do a screen share here. I hope that I do this correctly. I'm not really fluent yet on this stuff. So, nope, I clicked on I got to put my glasses on. So. All right. Rob, keep an eye on me. Make sure I'm doing this right. All right, so this is an article out of, so this is Zero Hedge, and there's several articles out today. And I was looking for a headline. Are there specific headlines that are acting as a catalyst to this market sell-off today? And yeah, this market pretty much sums it up. SHIT just hit the fan across markets, regional banks crashing. And the general takeaway from this article is the big culprit behind today's sell-off are the banks. Big surprise to everyone, I'm sure, given the way we've been covering the financial system. But look at what's been happening to the banks today. So all these talking heads who have been scouring every piece of social media and every media platform they can get on, telling you how wonderful and strong the financial system is. Well, apparently the street as a whole is not buying it. Now remember, Wall Street, they're all about making money. It's about making money. And they look through the garbage. They open up the hood, they look under the covers, however you want to put it. But Wall Street is voting with their money. And this is what's happening. The banks are selling off. So let me do another screen share here. I guess I gotta get out of this one and back into.
As you're looking at that, Ed, as you're bringing up that chart, is that what you would know as a bit of contagion going on there?
Oh,
so there was a...
Yeah, that's the word. Yeah, very good. All right. So let's take a look at some time. I'm just going to use this site because it's simple and people can easily spot the patterns and stuff. All right, so let's take a look at the 1 month chart to see so we can get a nice close look. All right, so you can see this is what happened yesterday. Now this is my clue yesterday to go short. I did short something. I don't like to give specific things because I don't want people coming back to me saying, "Oh, I did it and it didn't make money." So I don't give specific. I tell people exactly what I'm doing. But this is what I was looking for. The clue I was looking for was this is the previous. So this is last Friday, right? This is yesterday. The market had a big run up and then closed at the low of the day, gave it all back. That tells me that move was not reliable. What did I just tell you? You judge the quality of a rally by the quality of the sell-off. The market's previous day had a big run and went up to that previous resistance right there, right? And it did manage to push through in the morning, but by the end of the day, gave it all back. That gave me a high degree of confidence that today the market was going to be down. And look at this. So the market's been closed now as I'm recording this for 15 minutes. So the market is down 360 points on the day, and it was a long stick. So let's take let's pull back a little bit, get a bigger picture of the implications of this. All right, now this is the 3-month chart. Now, you see the market did have a nice little rally here for reasons we won't get into here, but it was a stupid rally. I knew it wasn't going to last. I was waiting for it to sell. So if you're looking to short, this is your stop right here. See this? I don't know if you can see my cursor, but this little peak here. Okay, and then if you draw an imaginary line across here, so that 34,000 level, that would be your stop. So if you were going to short, you would use that $34,000 number as your stop, because if it does turn around and take that off, it could run higher. But with the nature of the sell-off, this tells me, okay, that's a pretty dramatic hit. Now, let's take a little further look back at the market and talk about why this is important. Now, this is the 1-year chart. Now, let's say that you put the money into your standard blue chip equity fund a year ago. All right. The market is essentially right where it was a year ago. All right. Down a little bit. So if you put your money in, you didn't bother looking at it because you're busy with your life. But then today you check, you say, oh, well, my account is down, 1% year over year. Well, yeah, but at some point it was down. During that year, it had big swings. So this past year has been a trader's paradise. Now, traders, they can make money in both directions, right? Whether the market goes up or down. All they want to do, they want to make sure they're on the right side of the market. And there are plenty of opportunities here to play both sides of the market. There are big swings there. This is what traders love. That's why this is a trader's market. And that's why this is not an investor's market, because the investor put money in, a year ago, he's down probably 1 or 2%, whereas the traders along the way, they've been having a field day. Now, here's the important numbers that you really want to draw. You want to write down and keep an eye on. These are the big picture numbers. Take a look at the 2-year chart. Okay, so you can see here where the peaks are. The market rally, pull back, rally, and if you draw a line right along these peaks here, you got 1, 2, 3 peaks there, and now kind of 4. So really around that 34,000-ish level. For the market to have its next serious move to the upside, it's going to need to clear minimum that $34,000 number. Right now we're at 33,680, right? So it's going to need to clear that at the minimum. But even after it clears that, it still has overhead resistance at around 35,200 there and 37,000. So there's no easy money to be made on the upside in this market. On the downside, okay, the next major support is right under this V here. That's the next nearest major support level, which is quite a bit of ways. Actually, it's around 31,008, I think, 31,009. If you take that out, the next support is down here at 29,000. But where the real damage will be, let's take a look. Let's take a look at the real big picture. All right. So if the market eventually takes out this level, the next major support is down here at 18,000. Okay. So, and if you see below from this V here down to this V, there's a lot of error there. There's a lot of room for the market to sell off. Now, these things are not going to happen. Let me get out of this guy. Okay, so those are big picture numbers that you want to kind of write down, right? Those are things you want to live by day by day.